You are listening to CMQ Investing. I'm your host, Chris Franco. Let me begin with an unpopular opinion. The time that you think about what other investors are doing with their money is time wasted. It's counterproductive, and it's leading you to a path of mediocre returns. I'll explain exactly why I feel so strongly about this, but I want to begin with the inspiration for this episode, and that is a new article that came out today in Fortune.com about Warren Buffett selling some of Berkshire Hathaway shares in BYD. But before we begin, I want to encourage you to follow CMQ Investing on Spotify or Apple Podcasts. That way you will never miss any of the latest episodes. They will be in your feed as soon as they're released. And if you're already following, thanks so much. I really appreciate it. Now with that said, let's get to it. I'm going to begin by reading some of my highlights from this article that appeared in Fortune.com today. Shares in Chinese electric vehicle maker BYD dropped as much as 12% in Hong Kong on Wednesday, wiping $10 billion from the firm's valuation. And this is after Warren Buffett reported that his firm had sold over 1 million shares in the company. Buffett's Berkshire Hathaway has owned BYD shares since 2006 and earned a return of over $7 billion on an initial $232 million investment. By the way, not bad. The firm's recent BYD stock sale amounted to only a slight reduction in its stake, shrinking Berkshire holdings to 19.92% of BYD's Hong Kong shares from 20.04%. But investors are spooked since the sale was Buffett's first BYD divestment in 14 years, and the sale plays into rumors that Buffett is exiting BYD altogether. In July, a stake sale roughly the size of Buffett's holdings in BYD appeared in the Hong Kong Exchange's clearing system, prompting speculation that the billionaire investor was preparing to dump all his firm's holdings in the company. The head of one Hong Kong brokerage told the Financial Times that it was very disturbing to see Buffett potentially pulling the plug on his BYD investment. Some investors are interpreting the sale as a sign of a larger sell-off to come. There is too much uncertainties in Chinese markets, and I think Buffett got a little bit nervous, one chief investment officer told CNBC. Another chief investment officer told Bloomberg that Berkshire Hathaway is most likely profit-taking rather than liquidating its entire BYD position. Another investor cited in this article called the decision puzzling because BYD is having so much success in these current economic conditions. As I read the article, and specifically those reactions and interpretations from the professional investors who were cited, it reminded me of a lesson that I think we often forget. And that lesson is a lesson about thinking for yourself. If you are serious about being a great investor, you have to spend a lot of time thinking. If you're using other investors as a guide to what you should do, in all likelihood, you're setting yourself up for a bad outcome. And I'll explain a little bit more about this, but I want to first give you some of Warren Buffett's wisdom that really resonates with me and, based on my data, millions of other investors. It's from one of the most popular reels that I've shared through our account on Instagram that is called Warren Buffett Videos. That account, I believe, is close to, or at least it's approaching 200,000 followers. So thank you so much if you're following it. I hope you're getting great value out of it. I put a lot of time into, finding the best clips and trying to curate the best of Warren Buffett's wisdom about investing. So, but that aside, let's get to this really important lesson that, again, I know resonates because of that account. Buffett says that you have to buy businesses or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy into good businesses. And that advice will be the same 100 years from now. In terms of investing, that's what it's all about. And you can't expect anybody else to do it for you. People will not tell you about wonderful little investments. That's not the way the investment business is set up. You've got to learn what you know and what you don't know, and within the arena of what you know, you have to pursue it very vigorously and act on it when you find it. And you can't look around for people to agree. You can't look around for people to even know what you're talking about. You have to think for yourself. And if you do, you'll find things. Here's another reason why maybe Berkshire sold some of their BYD. Remember what we learned about the initial investment. It was $230-something million. And since that initial investment, Berkshire has earned $7 billion. In the last 100 years, how many investments have had that kind of return? So if they're taking a little bit off the table, taking a little bit of profit off the table, maybe it's because they have something else they can do with the capital. Whatever Warren Buffett is thinking, and look, we're not going to know, but whatever he's thinking, that shouldn't affect what we think. Because Warren Buffett is dealing with an entirely different deck of cards. I wrote out some questions that you can answer kind of like checklist style next time you find yourself getting a little bit anxious about something that one of your favorite investors is doing within their portfolio. The first question is, what is that investor's time horizon? And then compare that to your time horizon. How is it different? What expectations did that investor set about performance? Are they dealing with a large group of investors who are invested with them? Or are they just like you and investing their own money? Again, that's a very different set of circumstances. What is the business model of that investor? What is their incentive as a result of that business model? And how does that compare to yours? If the investor is selling something, is it something where they've already had exceptional returns? And another final question you can consider is there something better that they can do with that money? Because look, many of the greatest investors think in terms of opportunity cost. Actually, I just thought of one more question. What is the value of that investor's portfolio? What is the market value of everything in that portfolio? In the case of Berkshire Hathaway, according to their latest 13F filing, Berkshire Hathaway's stock portfolio has a market value of over $300 billion. Okay? That's enormous. I don't think people fully realize that. And that doesn't include all the businesses that they own entirely. While there's nothing wrong with being curious as to why an investor like Warren Buffett is, making a move, it's really not productive to think too hard about it because it doesn't affect us. And frankly, by doing so, by thinking about what he's doing, we're failing to apply one of the most valuable lessons that he has shared over the years. And that is the importance of thinking for yourself when you're investing in pieces of businesses. Now, with that being said, I hope this is helpful to you. If you have any requests for future episodes or feedback about this episode, follow-up questions, or you just want to say hello, you can get in touch with me at cmqfeedback.com. That's kind of like my catch-all, and I want to have a more systematic way to capture your feedback because I do apply it, and I believe that is key to helping continue to grow. Look, we're independent, and we continue to rise up the charts on Spotify and Apple Podcasts, so thank you so much. If you haven't followed already, please do. If you're on Instagram, Charlie Munger Quotes, Warren Buffett videos. I'll have more pages coming. For CMQ Investing, my name is Chris Franco. We'll talk soon. Later.